With the recent release of the economic survey and the unveiling of the annual budget 2026, these aren't just policy documents, they are blueprints that will dictate credit growth, liquidity. He'll be followed by Dr. Farid Ahmed, former ED of Punjab and Sindh Bank, providing a deep dive into the budgetary announcements. And finally, Sri S.C. Kalia, former ED of Union Bank of India, will analyze the sectoral impacts with a special focus on the banking industry. And to ensure that we get the most out of our speakers' expertise, we will have a dedicated question and answer session once all the presentations are complete. So we kindly request you to hold your questions until the floor is officially opened. And now let's begin. First of all, I'll invite Shri M.S. Sundarajan.
When you take, a action replay of what has happened, if you see, all these thoughts are in the short run. All these things cumulatively, it has resulted in the global economic activity remaining stable in the short run. See, as we move, United States and Europe, and also it captures about Asia Pacific dynamics, what are happening, predicted. And then forecast by the European Commission also indicate growth rates in the Germany, Italy, and France are expected to remain moderate. Growth in the Japanese economy remains moderate, but inflation continue to exceed Bank of Japan's target of 2%. Remains elevated compared to the historical trends because of the fragmentation in geopolitical relationship and there is a poor or the lower visibility on policy continuity. FDI inflows in the most developed countries have fell, re-evaluation of technology expectations, and escalation of the geopolitical tensions. Fiscal buffer, IMF gives to the global economy. Now we have seen globally, we will come to India, 357 lakh crores of rupees in financial year 25. What are that it help? There is a strong fundamentals of the Indian economy, and there is a good consumption and investment that is taking place in this economy. There will be a private consumption, which is about 61.5% of the GDP, and then strong investment, which is at 30% rate. This is again, there is a tax buoyancy, direct tax is also expanding, and then gross tax revenue is 11.5% of the GDP, up from 2.7% pre-pandemic. So the commitment to infrastructure, which is also there in this budget, which Dr. Farid is going to address after a few minutes, and then all these things, there is a productive. So when more and more people are going to do this, compliance culture is improving, and the IT department is also making use of the technology towards tracking to avoid evasion, and also banking sector is healthy. It has reached a multi-decade. Then crossing of the 12 crore mark for the unique investors in September 25, with a nearly current account deficit remains manageable level of 0.8% of the GDP in the H1 of financial year 25-26. Strong FDI inflows are strengthening the capital account. 2024, India's share of the global merchandise export nearly doubled from 1.1% to 1.8%, while its share of the global commercial services exports more than doubled from in financial year 25, registering a 6.1% year-on-year growth, driven primarily by robust growth in the services export. Indicates that Indian economy is stable in the external account. The share of remittance from advanced economies also increased. So it reflects the growing contribution from skilled and professional workers. Again, already we have seen FX reserves are about 7 and then the policy, there is a policy focus on soil, health, crop diversification, and productivity enhancement. Manufacturing is also renaissance. Gross value addition is growth at 7.9, 7 to 9%, 62% compounded annual growth rate. showcasing industrial transformation that is taking place in the Indian economy. Service sector continue to dominate. It contributes 53% of the gross value addition, with exports growing at 13% compounded annual growth rate, higher than 2.7% recorded in the H1 of financial year 25, but remain below the long-term average of 4.5%. Government is aware, conscious of it. Again, Rabi, it is not Ragi, Rabi sowing has been progressing well, aided by the very good reservoir levels, adequate soil moisture, and sufficient availability of input. As of 16 January 2026, areas then industrial activity strengthened in financial year 26, with industry gross value addition growing by 7% in real terms in H1, despite subdued and persistent global headwinds. Manufacturing growth accelerated, with GVA, gross value addition, expanding at 7.72% in Q1, 9.13% in Q2, approved across 6 states, involving about 1.6 lakh crores of investment. Again, it also talks about the important thing, infrastructure expansion, highlight for serving bankers, scope for funding, financing. National highway infrastructure have expanded substantially because of the power sector reforms. What is the impact that has been seen? What is the good thing is there is a turnaround. Discount companies have recorded a positive profit after tax of 2,701 crores in financial year 25. It's a lovely turnaround. For the first time, they have achieved it. And then telecommunication density is also reached around 86 point. Maternal mortality rate, MMR, by 86%, far exceeding the global average of 48%. Reduction in the poverty line, this is a very, very important thing. The World Bank has revised the poverty line from $2.15 to $3, adjusted for the purchasing power vanity of 2028. The poverty rate, according to the revised IPL, and then as we come to this, we will have a disciplined Swadeshi for strategic resilience, a calibrated 3-tiered strategy that builds critical capabilities, strengthens the advanced manufacturing, and progresses from self-reliance to strategic indispensability. Very, very important. From Indian economy is moving from self-reliance to strategic indispensability. Thank you, ladies and gentlemen, for your patience. That completes the gist of the economic survey. Thank you.
The budget, which follows normally the economic survey, and we have also followed the same pattern. And now I'll request Dr. Farid Ahmed to take stage and explain to the audience and the various provisions of budget.
Thank you very much. So the theme of the budget is Viksit Bharat, balancing ambition with inclusion. So there are 6 pillars. Tax reforms were announced to boost this manufacturing sector. Some of them are exemption from income tax for 5 years to non-residents providing the capital goods, equipment and tooling on raw material imported for manufacture of aircraft parts and used in maintenance. A 3-pronged approach. One is equity support through dedicated 10,000 crore MSME growth fund, then renewing the emphasis on service sector, which is nothing but the economy which is depending on the creativity. So they want to take initiatives like national destination digital knowledge grid to document culture and heritage sites, development of sustainable mountain turtle and bird watching trails, development of 15 archaeological sites as experimental destination, which comprehensively review the financial sector and align it with India's next phase of growth, while safeguarding the financial stability, inclusion, and consumer protection. For an individual under this scheme from 5% to 10%, with an overall investment limit for all individual POIS to 24% from the current 10%. Premium and exercise of options to be raised to 0.15% from the present 0.1 and 0.125%. And to diversify the farm output, boost productivity and raise farmers' income, Collectively, the reforms reflect a strategically integrated approach, broadening the farmers' income avenues, deepening the rural economic participation, and embedding the technology and market access as a core driver of sectoral advancement. Public capital expenditure has been increased to 12.2 lakh crores, reinforcing the momentum built over the past decade, specifically last 3 to 4 years. The focus goes beyond metros to tier. Various announcements have been made. Initiatives are training 1.5 lakh multi-skilled caregivers annually, then trust-based governance, extension of advanced ruling validity under customs from 3 years to 5 years, AI-enabled customs and cargo clearance processes, and ease of living. Extended timelines for filing a revised and belated income tax returns until March 31st, automated processing for obtaining the lower or nil TDS certificates, reduction of TCS to 2% on overseas education, medical remittances. So various steps were announced. Some of them have been listed here. So reform focus on reducing the compliance burdens, improving the access to finance, making the tax system more citizen friendly, and making overall ease of doing the business. Enhanced finance commission grants to states for capital investment expenditure and 40% of revenue receipts. The total receipts estimated to be 36.52 crore. Proposed high-level committee on banking for Viksit Bharat. It will comprehensively review the financial sector and align it with India's next phase of growth. An infrastructure risk guarantee fund will be set up. High-value agriculture, dedicated programs for high-value agriculture crops like coconut, cashew, cocoa, sandalwood, and credit support for livestock and fishery value chains align with the survey's emphasis on digital integration and value. Thank you, friends. Thank you for patient hearing.
Brilliant presentations. I mean, this budget is aimed to pursue the objective of Viksit Bharat that has been set out. Now let's come what he has explained, Dr. Farid Ahmed, that there was for the next year, it is projected to be even lower at 4.3%. First is in respect of capital goods, allocation of 2.19 lakh crores, which is almost 18% over YOY of setting up a global biopharma manufacturing hub for 26-27. I think we would be this kind of allocation which has been given for the agriculture sector that would enable us to also, get a lot of opportunities to continuously lend to this sector, which is very, very crucial and significant for our economy. This magnitude of PLI for manufacture of auto and auto components that would help us to move to the area of manufacturing of electrical vehicles in a very significant manner. Whenever these wars took place and whenever the supply chains were disrupted, these were the components which were very badly impacted. And now there is a push that is being given, lithium ion cells for battery. Now that would be also made available to those, and they have given now those global companies who want to come and provide cloud services made. And another very significant announcement, or which would definitely enable banks also in sector, that is around electronics component manufacturing. As Dr. Farid was mentioning, a high-level committee on banking for Viksit Bharat is now proposed to be set up. It has not yet been set up, but it will be set up very shortly. That has been announced. The whole idea is, if you have this vision for the banks, making them more comfortable for lending to massive infrastructure projects. As I was mentioning, 12.2 lakh crores CapEx is proposed. A lot of initiatives have been announced for MSME. I think that would be a repetition of whatever Dr. Farid has mentioned. But one very significant thing that I observed was, as he was mentioning, there is a credit guarantee enhancement. Then there is a, TETs, all CPSCs and large borrowers, they are required to now get their bills discounted through the TETs mechanism. But this will also put emphasis or put some kind of pressure on the banks to maintain those level of profitability in order to achieve the kind of, or in order to enable themselves to make the kind of dividends. Merger of REC with PFC, I think this would create a mega NBFC, and it would definitely enable them. Municipal bonds, I mean, they have also know that cities will get rupees 100 crore initiatives for bond, which he was mentioning, Dr. Freed, that has been increased from 5% to 10% for individuals. Earlier it was 5%, now that has been increased to 10%. But similarly, I mean, there have been certain other announcements concerning MAT change has been there, that has been reduced from 15 to 14%. These kind of, banks to set up IFSC centers in the gift city, which we have already discussed and deliberated upon, because all these sectoral, announcements that have been announced, be it on capital goods, what would be the terms of the reference? Let's wait for that. Once they are announced, we will get a much clearer picture to go in for these kind of, funding on long tenor projects. This announcement of infrastructure risk guarantee fund. So all this, what we have experienced over last couple of months.
After listening to three outstanding presentations, it is really difficult to add value. Number one, unemployment, government is trying to create as much employment as possible, not in the public sector, but in the formal sector and all these things. How to generate employment, MSME, and it will be consumption driven. One is how to develop this, MSME, or for that matter, farm sector, for that matter, services sector, informal sector, to make the economy highly productive, or we are not in a position to increase. It come to big bang reform. So this budget is also CapEx heavy fiscal consolidation. So debt to GDP ratio in 2025-26 is 50, more than 56%, 56.5 or so. Why it is cosmetics 4.4? To start with, how they have reached 4.4? Revenue growth this year will be only 7%, they have assumed. A very controversial issue, strategic sale, etc. Those things are not budgeted high. This is one thing. So budget constraints are there. Then, so uncertainty still remain. Now, one more thing actually, why the government is reducing import duty, but our financial system is being depend not only in banking sector, but also in non-bank sector. NBFCs at the lower rank, they are not regulated too much. Will it create some problem?
About your
Dr.
question
Bhai?
about NBFC,
Yes.
that was not only that 1,000 crores. There were two more conditions.
But they might be borrowing from banks.
And this is a rare opportunity to engage directly with our panel of highly insightful session to a close. And government recognizes these sectors' critical role in providing productive and gainful employment opportunities. And to those of our members, I will just say that the video recording of today's discussion and